structural perspective, we are quite bullish on India's growth prospects. So in 2025, we expect India to grow at 6.7% and remain on track to become the third largest economy over the next few years. Now, looking at the short-term sort of catalysts, there are three things that we are watching out for. So the first thing is the ongoing monsoon season. Now, if we do have a good monsoon season, then that can lead to expectation of lower food price inflation, which could give RBI further confidence to cut rates, which would be supportive for growth. Secondly, India has made a lot of progress in boosting its exports, both on the goods as well as services side. There are a number of government policies which are in place to boost export growth further to $2 trillion by 2030. However, the private sector capex and FDI has been lackluster in the recent few months. So if we do get some clarity on the global trade uncertainty, then that could be a catalyst to boost FDI as well as private sector capex. And thirdly, from a market's perspective, we need to retain a laser-sharp focus on corporate earnings. It's well known that Indian equities trade at a higher valuation compared to emerging market and Asian equities, and that's largely due to the fact that investors expect Indian equities to deliver superior earnings growth and shareholder returns. We will have the earnings season for April to June sort of quarter starting soon. So if we do get resilient earnings growth or an upside surprise, then that could power markets to new all-time highs. Conversely, if we do see some disappointment, there is a risk of a pullback, at least in the near term. We think that a boost or a pickup in urban and rural consumption could be a key driver for Indian growth over the next 6 to 12 months. Now, it's well known that urban consumption has been slowing down over the past few quarters and rural consumption has been relatively lackluster. However, we are starting to see signs of stars aligning for both urban and rural consumption to pick up. Let's start with rural consumption. So we had a good monsoon season last year, which led to a good winter harvest, and the current monsoon season is also progressing well. Now, that should result in increase in rural income, and that could lead to a boost in rural spending. We've already started to see FMCG volumes in rural areas rise quite rapidly, and that could spill over to purchase of two-wheelers, farm equipment, and big-ticket items over the next few months. Looking at urban consumption, while the wage growth in the urban areas has slowed down from what we have seen in the past 4 or 5 years, it's still fairly healthy from a global standard. The fact that inflation has been declining means that consumers in the urban areas at the margin have a bit more spending power, and hence we think urban consumption could pick up a bit from here. And thirdly, let's not forget, the government did deliver tax cuts in the union budget that was announced earlier this year, which ultimately puts more money in the pockets of an average consumer. And we should start to see the impact of that trickling through into the data in the coming few months. On a more forward-looking basis, we also have the 8th Pay Commission, which is due in 2026, and that could boost the salaries of public sector employees in a significant manner, allowing them to further sort of increase their consumption and providing further boost to the domestic consumption story.